Hello, everyone. Welcome to another Patreon one-on-one interview. We're here today with Steve Rosenthal, who is a senior fellow at the Tax Policy Center, the Urban-Brookings Tax Policy Center, and quite the guru on tax, and a longtime friend of mine. But I thought of him immediately when the Trump taxes finally were released, and he's been making the rounds everywhere since then. So thanks for spending a few minutes with us, Steve. Welcome, and you've just given an op-ed in the Washington Post. Trump's taxes are Exhibit A in the case for why the IRS needs a big upgrade. Before going to the IRS problem, let's zero in on the taxes themselves. So the headline seems to be a mind-blowing amount of losses dating back for, these are only a few years, but putting together with what else we know, just hundreds of millions of dollars in losses. How does that even happen?
Trump's losses are staggering. The most recent years have been somewhat scrubbed, and there are losses year after year there. But if you go to the prior 35 years or 30 years, Trump has been reporting losses, zero or negative adjusted gross income since 1985. And as a consequence, he pays little or no taxes. Sometimes he'll pay what is known as the alternative minimum tax, because sometimes losses are limited. But he's been losing money for decades, year after year.
And that, Steve, that's real money, right? I mean, it adds up to hundreds of millions of dollars. That means that, but for that, he'd be hundreds of millions of dollars richer. That's not conjuring kind of stuff.
No, that's the $64,000 question, Harry. Trump reports for taxes lots and lots of losses, tens and hundreds of millions of dollars of losses if you go back to the 80s and 90s. And the question, both as an enforcement matter and as a tax policy matter, is, are those losses genuine or are they fake? Have they been inflated? You know, our income tax system, taxes income. And if you have a negative, zero or negative income for the year, you pay no taxes. And that's fine. But what happens if you have a zero or negative income because you've inflated your losses? Well, that's not fine. That's not fine from an enforcement standpoint. That's not fine from a tax policy standpoint.
Hey, everyone. We're taking a quick break to ask you to take a second to like and subscribe. It's a quick thing that really helps the show. Thanks, and back to the video. Can you tell from the cache of returns that were just listed, do they have any kinds of red flags about whether they're phony? I gather that they are very poorly documented, these losses, yeah?
Yes, poorly documented. And no, we really cannot tell whether or not the losses have been inflated. There was a congressional oversight of these most recent 6 years of tax returns. And the Joint Committee on Taxation, Congress's nonpartisan technical experts, went in. They couldn't tell whether the losses were legitimate for these years. They were smaller than some of the years earlier, but the Joint Committee on Taxation could not tell. They directed the agent to pursue a little harder some of the issues. And I worked at the Joint Tax Committee, and they're very good tax lawyers there. I worked there in the 90s, and if they couldn't tell on the face of things, I don't think anyone could.
But well, and isn't it incumbent on the taxpayer to demonstrate it? I mean, if it can't be shown on the face of things, is that a violation or not really?
We have what is known as a voluntary tax system. Voluntary in the sense that we expect each taxpayer to come to to give the IRS a good faith estimate of their tax liability. And they are supposed to have receipts. Documentation varies from deduction to deduction, charitable, business, and the like. But it's hard to say what kinds of documentation Trump provided the IRS did not have much in their working papers. Now, having said that, one of the big takeaways from my review of the congressional oversight of the IRS audit is how feeble a job the IRS was doing. They only assigned one agent to one of Trump's presidential returns. And that was his first return in the third year of Trump's presidency. And they only got to the other presidential returns after Trump had left office. But with that one agent, the one agent, in effect, outsourced the audit of a lot of income and liability, income and deductions, to Trump's tax lawyers and accountants that prepared the return.
Right, he said accountants have done it.
Yeah, they were just overwhelmed. The IRS couldn't figure it out. So they said, these are reputable accountants. I guess we'll trust them.
So you just told me something I didn't know, Steve. We've got the returns now. What we don't have, though, is the underlying documentation. So presumably he presented support for that, and you could do a forensic analysis of it. We don't know what that might look like. Is that right?
Yes, except that I'm not sure the agent ever asked for it. I think the agent was so overwhelmed that they just said, well, let's trust Trump's preparers to get these numbers right.
Wow. All right. So it's I mean, my thinking is that if he's both vulnerable or lying in some way, or even exposed, that the biggest scheme here, if there are schemes revealed, would be these statement of losses. Now, his claim, if I understood this right, is that the massive losses, he said in the Hillary debate, it shows I'm smart, that I'm not paying taxes. But also it says the losses show that he was creating jobs. Does that hold up, or do you understand even the argument there?
Yes, I understand the argument, and it's a fascinating argument. Trump will say he pays few taxes because of the magic of depreciation. As you may know, we allow taxpayers to take a deduction for wear and tear of their property. And with real estate, those deductions are accelerated, front-loaded. And so it's known that real estate investors often can lower their taxes. But there's a few things wrong with that argument that what he's done is just perfectly lawful or smart. One is depreciation doesn't seem to explain much of the losses he's had. I've looked especially closely at the losses he reported, almost $1 billion in the 1990s. And there he just sidestepped a whole bunch of income recognition. And then two is, you sort of would expect depreciation.
He had money, but he called it a net loss because he didn't balance it against the income he got.
Right. What he did was borrow money. And when you borrow money, you don't have income because there's an offsetting liability. But when he spent that money, he could take deductions for his expenditures. However, when Trump later restructured his notes and was relieved of the liability, he was supposed to report income, and he didn't. I'd say about half of his $1 billion of losses should have been offset by what is known as discharge of indebtedness income. And so he never got there. And so consequently, from my review of some of his efforts, it's not so much economic losses that are inflating his taxes, but aggressive tax reporting, taking positions that others might not take. Trump will say, hey, this is just a lawful application of the rules, and there are depreciation deductions and other generous things for real estate developers. But in my view of his returns and his approach, it really is much more than that, stretching the rules beyond what we might recognize as lawful, or at least if challenged by the IRS, likely to lose, and interest and penalties could apply.
That's really interesting. Do you take it then now that they've been exposed? Do you think it's clear why he tried to hide them so adamantly and vigorously for so many years? Was it to cover up? Well, go ahead.
So Michael Cohn, his longtime lawyer, testified to the House Financial Services Committee, and he said that Trump did not want to release his taxes because he was afraid that some hotshot think tank guy would take them apart and show some liability, and he'd have to pay interest and penalties to the IRS.
He was scared of Steve Rosenthal.
At the time, I was the only one looking at his taxes, so I take some comfort from that.
Yeah.
But yeah, so I think that's what it is. Trump outmatched the IRS. That was the big problem here. The IRS has been auditing Trump forever, but their audits don't go anywhere. They're just outgunned. And so Trump can like hide the ball and take aggressive positions, and the IRS largely, I think, just lets him go. I saw a lot of that when I was in practice, in law practice, and defending taxpayers. You play a game called whack-a-mole. IRS raises an issue, you whack it down. They raise another issue, you whack it down. And eventually the IRS goes away, not because there wasn't any liability, but because the IRS couldn't figure out what the true liability was. And so the game is just whack-a-mole. And so that's a big problem, I think, that's been demonstrated when you look closely at the Trump audits, especially the presidential audits. You might have expected those to be done thoroughly. The IRS's own operating manual specifies how presidential audits should be done. And so everyone sort of expected that they were being done on an expedited basis, as the operating manual directs, and they would be being done thoroughly and hopefully fairly. But what we found was they weren't being done much at all.
Yeah, that's really stunning. And I guess it's not clear whether that was just dereliction or politics, but you really placed a big part of the problem, Steve, with just, as you put it, IRS is no match for a taxpayer with complicated financial affairs. I would think most people find that kind of mind-boggling, and I think of, if I got a call from an IRS auditor, it would be pretty frightening, but and they're trained in this specially, but it's just is it a matter of sophistication, a matter of horsepower? Is it a matter of resources? How can the federal government be outgunned by a single taxpayer?
The reason why you, Harry, would be in trouble if the IRS caught you or contacted you and found an adjustment is your taxes are open and shut. You may have a W-2, you might get some 1099s from your bank and your broker, lots of good information reporting, and compliance is like 98, 99%. Well, Trump's business empire is comprised of what is known as LLCs and Subchapter S pass-through businesses. He has more than 500 of them. And the tax rules for pass-through businesses, especially partnerships, are really, really hard. And then these partnerships and pass-throughs, one owns another. And so it's often hard for anyone to get through to the bottom of the tax claims. And so because Trump's affairs are arranged in such a complicated fashion, the IRS really struggles to figure out what's going on. Even relying on Trump's lawyer and accountants, the IRS still, I don't think, got very far. Trump is notorious for obstructing and delay. And if Trump applied to the IRS agent what he applies to the rest of us, I pity the poor agent. But certainly the agent was overwhelmed.
Remarkable. Okay. Just staying with the big problem. So it seems to me there's just a lot that goes under the rubric of these losses. There's also, am I right, the other big ticket area that a vigorous and strongly armed audit would look into is expenses. So it sounds like you see a lot of possible fishy treatment of expenses. Yeah.
Potentially, and that's one of the areas that the Joint Committee on Taxation suggested the agent pursue. But the problem there is the agent, at one point, the Joint Tax Committee quoted the agent as saying that, in effect, the cost-benefit analysis of looking at all these different expenses just wasn't there. The IRS lacked the resources to pull it off. And at some level, a lot of those are nickel and dime. Whether or not Trump actually took a deduction for the $70,000 haircut, or whether or not Trump took a deduction for the Stormy Daniels settlement payment, that's sort of small potatoes. Trump generates losses in the hundreds of millions of dollars, almost $1 billion in the 90s. Those losses he uses to offset his income later. So from my standpoint, the fact that he's taking personal deductions buried somewhere in this sprawling empire of 500 different entities, pass-through entities, we're not going to find it very easily. And he's sort of, I think he's probably hopeful that it's not looked for. But that's still, from a dollar standpoint, sort of smaller. It's hard to make that up in volume to zero out your taxes.
I mean, I guess that's right. On the other hand, you have a mandatory audit program for presidents. I think it's probably you want to get to the treatment of their stuff. Steve, is this sophisticated enough that we think it actually had to have been sort of unscrupulous or Trumpy accountants who devised it, if it really was outside the lines? Or is this the sort of thing that we posit Trump himself would have the wherewithal to do? Just call these losses this, and to be able to monkey around.
Well, monkeying around by labeling personal expenses business expenses, that does not take any sophistication.
Yeah.
Trying to sidestep income from relief of liability through restructuring of your debt requires sophistication. Trying to take a $700 million abandonment loss for abandoning a partnership interest takes some planning help. So
planning help. So you don't think Trump devises this all by himself with his Wharton degree?
Well, yes and no. No, he does not come up with the plan, but Trump doesn't like to pay taxes, we know.
Yeah.
And so from my perspective, I practiced for 20 years, and so a lot of planning. A client would ask you, like, what are my options here? How can I lower my taxes? That's the value added that tax planners bring to the table. And you could say, well, you could try this approach or that approach. This is more aggressive, more likely to be picked up by the IRS and challenged than that. One of the phenomenal things from that $916 million loss that he generated that I discovered from looking through the bankruptcy filings was that his own lawyer said he could take this position that he had no income on the restructuring of his debt, but if challenged by the IRS, he would not likely prevail. And so, in fact, it's sort of strange for a lawyer to tell you how you won't
right.
Only lawyers only tell you, but you can sort of imagine behind the scenes there was some concern that Trump would blame the lawyers. But one thing that I suspect went on is lawyers cannot advise clients on taking a course of action based on likelihood of getting caught. They can only say, if challenged, what's the likely outcome? But clients, the taxpayers, they can play whatever hide and seek games they might like. They could say, well, just give me a position, an argument that I can use so that it doesn't look like it's willful omission of income or disregard of the law, so I don't have any penalties or exposure to any criminal sanctions. That goes on a lot. And so when the IRS is so poor at auditing, the chances of actually having to defend aggressive positions are rather low. And so as a consequence, the gamesmanship of playing hide and seek actually is quite profitable. That's, of course, discouraging for our voluntary tax system, but sometimes sophisticated or rich guys get away with this stuff.
And what happens now? So, I mean, we know you've mentioned, I think, an outstanding issue dating back many years that could have $100 million consequence for him. But just these things that are now have seen the light of day, the possibly untoward or improper, even criminal treatment of losses, maybe even expenses, though you say that they probably don't go after that. Is he now in some kind of peril now that it's been released? Do we anticipate investigations, or is it just kind of now we've heard this explanation of we're just outgunned, guys, from the IRS? Does that suggest that he's now gotten away with it, with the problems that are in these last 5 years of taxes?
Well, the problems in the last 5 years are much more minor than the ones earlier. Not a coincidence. because last month at the criminal prosecution of the Trump Organization, Trump's tax accountant explained that he had directed the Trump Organization to make their tax returns squeaky clean once Trump took office. So I suspect that Trump cleaned up his act some. Trump may be nuts, but he's not stupid.
Mhm.
So, but if you go back, like those big losses in the 1990s, the statute of limitations ran. Looks as if the IRS just never adjusted any taxes for the positions Trump took. But the big $700 million loss claimed in 2009, Trump was under audit for that old year at the time he entered office in 2017. And that audit still remains open. In fact, that audit and the 2009 through 2013 audit cycle, which had all these huge losses that could be carried forward to soak up income in the future, and they were carried forward through 2015, 16, 17, and then 18, they were used up. Those carryovers were in question. And the agents looking at the 2015 to 2019 and 20, the presidential years, the agent was unlikely. The agent seemed to be slow in part because they hadn't resolved the earlier cycle, and they didn't seem to be in a rush to resolve any of the later cycle. So I think they're all tied together. So the peril to Trump is the
Currently,
fact. Yeah, I think the peril is the very concerns that he expressed. Now that everyone knows there's a $700 million adjustment potential out there, and the whole world is looking at it, and people are writing articles, like the New York Times spoke to a lot of lawyers asking about how strong this position would be, that could inform the IRS audit, and those years are still open. As a matter of fact, one of the charming or amusing circumstance was, as the IRS was opening these tax audits of Trump's presidential years, they were reading the New York Times story as to the shenanigans that Trump was up to. And so the IRS agent structured his investigation and audit based on the New York Times investigation. So it's a sort of a shame that the New York Times reporters, in effect, are doing the job for the IRS. But that's where we're at.
All right. So let's just close with this. Even setting Trump aside, you've diagnosed problems here that go beyond him. What, if anything, can be done to shore up the whole system such that the IRS is not outgunned and would no match for a taxpayer with complicated financial affairs? Or is that just going to be the, as I think you put it, risk benefit analysis going forward?
Well, we all knew that this situation existed, that taxpayers with these past due entities, those with complicated returns, they were just outgunning the IRS and effectively audit proof. But on the good news side, in the last Congress, there was an extra $80 billion that was given to the IRS, half of which was for enforcement. And President Biden promised to use that money to target sophisticated taxpayers, corporations, and rich individuals. That's the good news. The bad news is the House Republicans have pledged that they want to rescind that enforcement money, that $80 billion. And so that will be a target that will be coming up over and over again.
Because they just think the IRS are part of the, deep state or whatever.
Why do the House Republicans, want to deprive the IRS of the resources to pursue, aggressive taxpayers? That's a little bit of a puzzlement. You go back 30 years, back when I was working on the Hill, there was bipartisan agreement that the tax laws should be enforced. But today's Republican Party is much more, especially on the more conservative end, much more wary of the IRS and the institutions. And so when the House Republicans last took over the House of Representatives in 2010, they immediately started gutting the IRS budget. And 10 years later, the IRS had in real terms 23% less money and 26% less enforcement resources. And so that $80 billion was to reverse, those large setbacks. But now that the Republicans have taken over the House of Representatives again, will they resume their course of stripping the IRS of resources? Certainly, they're planning on going down that path, but will they succeed? It depends in part on their leverage. One of the troubling things to me, though, is the rhetoric. That is, those politicians who want to strip the IRS of resources then later complain that the IRS functions poorly.
Right.
After stripping the IRS of resources and demonizing their employees. So what is the response? Well, the Republicans, many of these anti-IRS people want to strip more money from the IRS. And that vicious cycle has been a real problem. And it has been addressed in part by $80 billion. From my perspective, I hope the IRS keeps the money.
Steve Rosenthal, thanks very much for being with us. This stuff is very hard to penetrate, but not impenetrable when smart guys like you are here to help explain it. Thanks very much. I know you're going to be a very busy guy for the next couple of weeks as people continue to talk about these taxes.
Thanks, Harry.
Thanks for tuning in. If you enjoyed this video and other Talking Feds content, please take a second to like and subscribe. Talk to you later.